You're watching Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. We gauge expectations for maize prices in Nigeria as the dates for duty-free import of maize and other food commodities draw near. Research from Oxfam shows world's richest 1% increased their fortunes by a total of $42 trillion over the past decade. Plus, a global survey by Gallup shows 4 in 5 Kenyan workers are unmotivated. Hello, welcome to the program. I'm Ladi Williams. First off, let's get a check on the commodities at this time. We see gold prices, that's dropped as investors book profits ahead of U.S. economic data that could offer more cues on when the central bank will cut interest rates this year, and they also want to know by how much. The markets are awaiting U.S. GDP data. That's personal consumption expenditure data. So there's so much data coming out from the U.S. at this point. The Federal Reserve's favored measure, that's of inflation, that's on Friday to calibrate their expectations of timing of rate cuts. But we can see the market's already reacting to that, with gold down about 1.82%, a big drop there for gold. Silver is not left out, 4.40%. We know at the end of the day, these metals are looking for direction when it comes to interest rate hikes in the U.S., and that's why we're seeing this happening now. $895, that's for palladium. So palladium losing that $1,000 mark and going lower even at this time. So that's how what's playing out for metals. Investors are waiting all this data coming out from the U.S., and we know that commodities are going to react definitely. To some other stories now, we see dual-listed energy company Oando PLC says it has been granted approval by the Nigerian Upstream Petroleum Regulatory Commission to proceed with the 100% acquisition of Nigerian Egypt Oil Company from its Italian parent company, that's ENI. A statement released, Oando says the following: ENI's receipt of consent, both parties can proceed with the completion of the transaction. In September 2023, ENI agreed to sell NAOC, its wholly owned subsidiary, focusing on offshore oil and gas exploration and production, as well as power generation in Nigeria, to Oando. However, the Nigerian National Petroleum Corporation Limited resisted the move, emphasizing that ENI did not get the necessary approvals from regulatory bodies to sell its assets in Nigeria. NNPC did say that definitely this move had to be authorized before it could actually go at this time. But we'll keep tracking that story going forward. But let's get a check on the oil market now. We're seeing oil prices also getting hammered. Right there in the market, we're seeing investors selling off Brent, and now normally we're used to WTI for the longest time now holding that $80 mark, then Brent maybe around 85. So we're seeing that range being broken now, and WTI $76.85, losing that $80 mark, and now we're watching $70 at this point for WTI. But as I always say, we know this is the grade that Dangote Refinery likes to import at this time. So that's getting cheaper right now. Brent holding on to $80 mark. Let's see if we can get sub $80 for Brent going forward at this time. So a lot happening in most of the markets we track at this time. We're seeing a lot of volatility. So investors, you need to hold your hats at this point, but it's looking like it's going to be a really fast one with what we're seeing in the markets at this time. And talking about moving away from oil, you know, at this time, we've always been talking about the cleaner alternatives. And earlier this week, the Securities and Exchange Commission, in partnership with the Africa Development Bank, put together a capacity building workshop for capital market operators on green finance. Let's get a sense of prospects for green finance in Nigeria. To discuss this, we have Dr. Mo Omamegbe, the Director of Strategy, Securities and Exchange Commission, joining us from our Abuja studio. Great to have you on the show. Good afternoon.
me.
Good to have you, sir. So, first off, talk to us about green finance, and we know you had that training earlier this week. Talk to me about the turnout. Was it impressive?
Yeah, thanks very much for that question. Yes, the SEC, in collaboration with the African Development Bank, hosted a workshop on green finance for capital market stakeholders. Essentially, the workshop was really to go ahead and enhance the knowledge and understanding of green finance by capital market stakeholders. We're talking about investors, we're talking about issuers, also regulators, government agencies, and market intermediaries to really enhance what they know about green finance and this very important and emerging asset class. It was a very successful event. We had a very huge turnout, both at a physical location in Lagos and also a ton of people logged on online as well, virtually.
Definitely, I'm sure a lot was said, about green finance, but some people, when they hear green finance, they're thinking it's some kind of green money, at this time. Help us break it down and the importance of green finance for a country like Nigeria that's still heavily reliant on fossil fuels.
Yeah, thank you very much for that question. I want to take us back a little bit. I think it's to December of 2015, where Nigeria was a signatory to the Paris Agreement. We are aware about the dangers and continuing dangers we face from climate change and greenhouse emissions. So the focus has really been, we've seen over the world, and also we've seen a gradual pickup in Nigeria as well, on sustainable development. And for sustainable development to happen, you have to go green. So green and sustainable finance, it's a critical component of sustainable development. And sustainable growth essentially is really trying to grow our economy without hurting the environment. So the term green is really to signify every effort in that direction to ensure that investments and the activity of humans on this planet really do not hurt the planet. So as we go about our daily activities to fend for ourselves, to grow the economy, we want to make sure that we do that in a sustainable way. So green finance and sustainable finance, for those of us in the financial sector, is a way to try to address that, to add our own quota to ensure that we are not only developing and growing our economy in a sustainable manner, we are contributing to a healthy world, a healthy climate, and doing that in a very responsible way as well.
All right, so talk to me about why the Securities and Exchange Commission is getting heavy on green finance, and why now?
Thank you very much again for that question. The SEC has a twin mandate. The first mandate is to regulate the market. The second mandate is to develop that market, the capital market. And part of developing the capital market really entails working with stakeholders in the market to look at innovative ways to grow this market. And we also are championing the goal of trying to make Nigeria the destination, if you will, for green. And there's no better time than now. There is tremendous opportunity in this space, really, to raise finance and to raise capital, not only for green projects, but also for infrastructure, where we have significant deficit in our country and also in the continent. So African Development Bank, as part of their high fives, aligned with us in this area to look for innovative ways to not only deepen our markets by coming up with innovative and products like green bonds, but also to work together to make sure the uptake in this part of the world in this emerging asset class is really, really huge. So working with AFDB, they financed this workshop. We wanted to take advantage of that finance that was made available for us to continue to grow this space. You would recall that Nigeria played a key part in the signing of the Paris Agreement, and we were a pioneer green finance issuer in Africa. So the first sovereign green bond in Africa was issued by Nigeria. And we've seen a couple of sovereign green issues since then. The expectation was that it was going to be it was going to trigger a lot of issues in the corporate space. We've not seen that traction. So we believe that we needed to bring together all the critical stakeholders in this particular space to not only enhance their knowledge on what green is about and how it can benefit our economy and also benefit the planet, but also to collaborate and look at areas we can work better together so that the uptake in the corporate space it's high.
Right, and definitely, you know, for companies to be able to play in this green finance market, you need to be good when it comes to ESG compliance. So I'm wondering, will the SEC also have to monitor some of these companies, you know, that are going to be hitting the green finance markets, you know, at this time? It's going to put more job on the table of the Securities and Exchange Commission, or more work?
That's a great question. Yeah, that's a great question. Actually, the SEC a few years back rolled out the sustainable guidelines, the sustainable finance guidelines for the capital market. The idea was that working under the umbrella of the FSRCC, we wanted to kind of like put the word out there and begin to have entities in the corporate in the capital market carry out the activities in a manner that followed ESG standards and ESG regulations. So we have sustainable finance guidelines that's been rolled out. We also are monitoring our capital market operators and public companies as well to make sure that they follow these guidelines and we begin to really grow this space the way it should happen.
And I'm also wondering, you know, the impacts for the capital market generally. Are we going to see listed companies also have to play, you know, when it comes to ESG? You know, at this point, they have to take that seriously. Would they have to take that more seriously at this time? You know, looking at the whole capital market in Nigeria.
I think that's a key question. Yeah, we actually expect that to happen. I think the monitoring from our perspective, it's gonna continue to grow. We're really beaming our spotlight on this area. We know that a lot of capital market operators and public companies are really beginning to embrace green and ESG principles in both their internal activities and for investors and those that actually put together portfolios, they're taking ESG consideration in building those portfolios. So this is the first of many collaborations that's going to happen between the SEC and capital market stakeholders. And we believe that as more and more stakeholders become aware of the importance of this asset class to not just only the activities, but also to the global market and to our local environment as well, that potential will be enhanced and we will tap it and hopefully we'll grow this sector the way we should.
Right. Now, and we know the average investor, you know, just wants to see that asset class actually, that they're investing in actually do well. So what's in it for investors, you know, when we're looking at green finance at this time?
Yeah, for investors, I think the capacity building event was really targeted at them as a primary beneficiary. the goal is to begin to address those people that actually, or those investors that are green at heart, if you will, and those that actually do not really understand, to see the need for this investment class, to not only be an opportunity for them to have a different investment vehicle to diversify their holdings, but also for them to contribute to a clean environment and a better planet for everyone.
Right. I guess investors need a better planet so that you can actually enjoy the proceeds of your profits at this time. But thank you so much. It was great having you, Dr. Mo Omamegbe is the Director, Strategy, Securities and Exchange Commission. Thank you for spending your afternoon with us.
Thanks, Laddie, for having me. Glad to be here.
Thank you. All right, we'll take a break now. Talking about the markets, we'll get a sense of what's happening with the local bourse intraday and most of the global markets that we track. That's in a moment. Do stay with us. Welcome back. Let's head straight to the markets now. We have Anete Edet with the details to get a sense of what's happening in the local bourse and most of the global markets we track. Good afternoon. On the week before we had the MPC decision, it's not looking good for the local bourse at this point. It's been red after the decision.
Laddie, I think it's a second day of pullback for the markets. You remember yesterday I said, yes, the market is not necessarily responding to the MPC's rate hike, of course, which is on one side beneficial to the fixed income market, but on the other side, particularly the economy, you have the Manufacturers Association, the Lagos Chamber of Commerce saying this is having a negative impact on the overall economy, on the manufacturing sector. So, but
which I guess was expected because
exactly.
Any time the U.S. Fed or central bankers, once they raise rates, they're doing that at the expense of growth. So I guess
and favoring the banks.
Exactly.
So, but of course, our analysts, which we'll be having in a couple of minutes from now, will be giving us more details about that. But for the market, it's in session and still at intraday it's negative. So let's tell our viewers on around the world how the market is moving at this time. So take a look at the screen here. Year to date, the market is still in positive terrain and still among the best, if not the best, #1 on the African continent at 34.4%. And then that's for year to date. Month to date, the market is still positive, 0.3%. But at intraday, 0.06% negative. And this is because we have lots of pullbacks. So we had pullback, no thanks to the impact of sell pressure within the market, and of course we'll be having more details about that. But so far, the market had lost about 68.49 billion and still struggling to maintain that 100,000 points, 100,303.45 points. For the JSE, we see almost a 1% drop at intraday, and it has fallen below the 80,000 points where we talked about yesterday. Maybe if it was able to regain the 81,000 points, but alas, it went down below 80,000 points at about that 79,000. And of course, the market's still in session and will be closing much later. So we'll look out for that closing of the JSE and the NGX. Now, on the other side of the market, where we see for Egypt, all the markets across the African continent were in the red, and that's no thanks to the impact of sell pressure on the sides of investors across all these markets. The EGX 30 of the Egyptian Stock Exchange at 0.36% in a pullback, while Kenya Stock Exchange for Wednesday's close 0.77% down, and also it just dropped below the 107 points, which we recorded a couple of some days ago. Now, let's talk about the Treasury bills auction, which was conducted yesterday. We saw that first, the central bank had conducted the Treasury bills auction, where we saw much of the concentration was on the one-year Treasury bills instrument, which was at a stop rate of 22.1%. Remember, we talked about the impact of the MPC's decision on the Treasury bills market, which it affected the stop rates. And we saw for the market, we saw the Treasury bills market. It was in the bearish bullish note. The average yield there it declined by 2 basis points to 25.0%. while activities in the Treasury bonds market, it was mostly calm. This because the average yield there increased slightly by 1 basis point to 19.2%. And talking about the Treasury bills auction, we saw that the central bank had decided to sell the one-year Treasury bills at a high stop rate in its bid to attract more investors by offering more competitive returns for that market. And of course, at the same time, we also saw that the bonds or the Treasury bills auction, it represented an increase of 21.53% from the 229.79 billion naira offered in the previous auction, which was on June the 26th. Now, the total subscription for these tenors, which was for the 182, the 91 days, as well as the 364 days tenors, they all recorded an upsurge. And then, of course, the latest auction, the total sales amounted to about 277.96 billion naira, which is a marginal decline of about 2.2% from the 284.26 billion naira allotted last month. And so from there, we move over to the Middle East, where you can see here only the Abu Dhabi indexes and the Dubai FM, both on the United Arab Emirates, were in the positive terrain at intraday 0.34% for Abu Dhabi at 9,294.91, while the Dubai was up marginally at 0.10% at 2,432.78. The other sides of the market, where we see Saudi Arabia and Qatari Stock Exchange both in the red, more than half of a percentage. And for the Qatari Stock Exchange, 0.39% intraday, 10,098.36 for the Qatari Stock Exchange, and 12,000, just slightly hanging on to that 12,000 level for the Saudi Arabia Stock Exchange, which you call the Tadawul. Now, from Saudi Arabia, we fly over to the United States, where we see the United States, the stock futures there, sentiments there, they dropped, and this is ahead of the key data as well as more earnings. Of course, we also saw that Wall Street closed midweek trading session in the red, and no thanks to the some sell pressure there. Of course, we also saw that the market is still reacting to so many other a number of earnings reports which have greeted Wall Street. But what is the market to expect today? First of all, the jobless claims data, always released on Thursdays, is expected, as well as the preliminary second quarter GDP of the United States, which is expected to be opened before the market, before the opening bell, which is at 2:30 Nigerian time for the U.S. stock market. Now, we were talking about Nigeria's the fixed income market, or actually the equities market, not the fixed income. We were talking about the activities of the intraday, as well as the impact of the MPC's rate hike. So now let's bring in our guest, Dr. Peter Abe, stockbroker with Stanbic IBTC Stockbrokers, to give us more details about this. Thank you for joining us, Dr. Peter.
Thank you for having me. Good afternoon.
Okay. Now, Dr. Peter, first, we know that interest rate hike, which was announced by the central bank's MPC, and that's the 13th rate hike, if I'm correct, so far since it started this rate hike since 2022, and it has positively affected the fixed income market. But how is it affecting the equities market and investor sentiments?
The normal expectation and reaction is that, there will be investor flock to the fixed income securities, and we see less of activities on the equity side. And the market has been quiet lately from last week, and we also saw few tradings on the Nigerian exchange this week so far, except for some few blocks. But I would say it's still largely quiet, and that is expected because of the high interest rates that people will get on the fixed income securities.
Okay, so now you've just talked very shortly about the impact of that MPC. Now let's move over to the earnings side of the market, where we see so far we've seen Seplat, which just announced Seplat, Airtel, Transcorp Power, Transcorp, FCMB, and quite a number of second quarter earnings greeting the market. So far, how has this impacted the market? Because the market at intraday is still trading in the negative. So how are investors reacting to some of these fresh numbers?
It's more like muted reaction, if you ask me. ASI has lost 17 basis points so far today. And in the names that you mentioned, Transcorp, Seplat, Airtel, largely flat at the moment, and also volume in them, are also quite thin. So I think generally, probably if we continue to see more numbers, especially maybe from the financials sector like banks, I think that will move market. Though we still expect banks to release most of their numbers around August. They're likely going to audit some of their numbers. So from August, we'll start seeing all these banks. But I think so far we have seen the reactions are muted.
Okay, so Dr. P, before I let you go, what is your expectation? We have just about 5 trading days left for the month of July. That's between today, tomorrow, and Monday down to Wednesday next week. So what are your expectations for the equities market for the remainder of the month of July?
Well, we've had quite some reactions to so many policies so far this month alone. But I think that will continue into the month. And I feel that at the end of the month, we will likely end the month on a negative note, especially from the banking sector.
Okay, so Dr. Peter, before I let you go, tell us what exactly, is there any fresh information that investors or viewers can digest or look forward to, apart from the earnings results being announced by some of the corporate companies listed on the NGX?
Well, the obvious is that, like they said, the stock exchange is the barometer of the economy. So I think that is also something investors have to actually look at. We see the exchange mirroring the economy. So whatever we see in the economy, the policies, I think largely they will affect the market. So I think going forward, aside the numbers, we also have to keep monitoring what is happening in the economy and the various data that are coming out in the economy as a whole.
Okay, Dr. Peter, I think we'll leave it there, and of course, look, keep our eyes out on if the bears will continue to maul the market, because it's been 2 back-to-back days of profit-taking at the market, the equities market to be precise. So let's see if there would be a silver lining for the market at the close of Thursday's trading session into Friday. But thank you so much for your analysis on our show.
Thanks for having me.
That was Dr. Peter Abe, stockbroker with Stanbic IBTC Stockbrokers, for the market's numbers at intraday. And before we go, although we're going to spend some time analyzing the Asian markets, we see that the regional indexes all in the red, and they're tracking the losses that was recorded on Wall Street overnight. For the Nikkei, we see, wow, a massive 3.28% pullback on that equity, on that index to be precise, and all the way from 39,000 points, it has dipped to about 37,000 points, 37,869.51 for the Nikkei, which has been taking lots of bashing. No thanks to many factors, economic factors. First, we saw that the yen marking a 4th day of strengthening against the US dollar. It hits an 11-week low of 152.828 against the greenback, that's the US dollar. For South Korea's Kospi, we saw a 1.7% pullback at 2,710.65 points. And this is coming as the country's GDP came in slightly lower at 2.3% against an expectation by economists of 2.5%. So we see that taking toll on the market. For the Hang Seng Index, that's the Hong Kong Hang Seng Index, we see 1.67% pullback, 17,021, barely hanging to that 17,000 points, where we see if the market, when it opens tomorrow, well, they're 8 hours ahead of Nigerian time. So when they open, later today and closing into the early part of Friday, let's see if that number would be on the uptick or on the downtrend. Now, on the other side of the market, we see for the Shanghai as well as the Australian ASX 200. That's the Australian Stock Exchange 200, the top 200 companies listed on the Australian stock market. 1.29% pullback on that market, 7,861.20, while for the Shanghai index, we see a 0.52% pullback at also it has fallen all the way from the 3,000 level and still struggling in between the 2,800 points level. So, Ladi, that's it for the Asian markets, which we normally do not have time for Asia, even though they're 8 hours ahead of us.
And quite interestingly, as you were giving us all of that data from the local boards and major markets we track, breaking news out of the U.S., we see the second quarter GDP numbers already out, you know, at this time, 2.8%.
2.8%.
Higher than the 2.1%. Expected by markets there. So again, the U.S. economy has grown in the second quarter 2.8%, outpacing the expected 2.1%. So you heard it here first.
And of course, you're going to see that rub on the Asian market because Asia normally tracks the U.S. When they go to sleep, the U.S. is opening, just waking up and for trading. So when the U.S. closes, they're tracking that performance and saying, okay, all right, this is where that was the direction. Okay, so let's follow the leader. The U.S. of course is the world leader.
And we'll get the impact for the U.S. market at about 2:30 Nigerian time when the market actually opens. Thank you so much, Manite, for giving us most of the markets that we track right here and globally. But let's take it on to Europe now. We see the euro area's business activity that stalled this month, according to latest survey from the S&P Global. Join us with more now about the region's economic trends is DW correspondent Chipoda Chimbelu right there in Berlin. Great to have you, Chip. So what's the latest?
Thanks for having me. Well, Ladi, activity in the Eurozone's manufacturing and service sectors barely grew this month. S&P Global's preliminary composite purchasing managers index fell to 50.1. That's below what some analysts had forecast and puts the index barely above the 50 mark, which separates growth from contraction. This could be more evidence that the euro area's economic recovery is faltering. Now, the latest figures show that despite growth in the services sector, Europe is experiencing a manufacturing slump. The question is whether that puts the region on a worse than anticipated track. In spring, the European Commission expected the Eurozone economy to average 0.8% growth this year. It said that despite strong employment numbers and wage growth in the bloc, European households have been saving a larger share of their disposable income rather than spending it. And industrial giant Germany is also a drag on Europe's economy. It is only expected to grow 0.2% this year, according to a Reuters poll this month.
All right, so tell us more, at this point, how's the German economy doing?
Well, the latest German PMI data indicates that business activity unexpectedly contracted this month due to a dramatic fall in manufacturing output. But Germany's consumer sentiment is forecast to recover significantly. Household incomes are expected to reach the highest point in over 2 years. That is mainly due to slightly lower inflation and a wage increase, a survey shows. And the outlook, however, could be a little bit complicated for the German economy. This week, the Bundesbank said inflation in Germany is unlikely to subside any further in the coming months. The German central bank expects inflation to fluctuate, and that is mainly due to the high volatility of oil prices last year, which are only being reflected in consumer prices now. These indications are in line with the European Central Bank's forecast for the Eurozone, and analysts say they point to the likelihood of another interest rate cut by the ECB this year. But whether this will be as early as September is something that remains to be seen.
All right, thank you so much for details there, right there in Europe. But let's get some other stories now. See, the world's richest 1% have increased their fortunes by a total of $42 trillion over the past decade, and that's according to Oxfam, and that's ahead of the G20 summit in Brazil, where taxing the super rich, that's topping the agenda there. But despite this windfall, taxes on the rich and the plummeting debt and hitting historic lows, there's a warning of obscene levels of inequality with the rest of the world's left to scrap for crumbs at this time. So Brazil's made international cooperation on taxing the super rich priority of its presidency of the G20. That's a group of representing the 80% of the world's GDP. So this data from Oxfam there showing us that at the end of the day, the rich is getting richer, at this point, and some of the poor getting poorer. But definitely it's the data that gets one, thinking at this time. Let's look at other stories now. A recent global survey by Gallup there, an investment company, shows that for every 5 employed Kenyans, 4 lack the drive to go above and beyond in their roles at work. The study says 80% of Kenyan workers are disengaged, meaning they only do the bare minimum and are only with the current employers because they haven't found a job opening elsewhere. Disengaged from work refers to a lack of emotional or psychological connection to one's job or workplace. Employees are disengaged typically shows low levels of motivation, commitment, and enthusiasm for their work. At 80%, the rate of disengagement is slightly higher in Kenya and the East African region compared to the world's average of about 77%. All right, let's head straight to the commodities market now. Definitely, we're going to be looking at maize and corn at this time, as it's popularly called in the streets of Nigeria. It's one of the commodities that will be imported duty-free starting from August 1st, 2024 to January 1st, 2025. Let's gauge expectations now with Tomiwa Jawole, analyst at FDC. Great to have you on the show.
Thank you for having me, Ladi.
So I know duty-free imports on corn, that sounds good, but there's this risk of a 75% chance of La Nina weather conditions, in top wheat-producing countries. Could this dampen the expected fall in domestic maize prices in Nigeria? We have about 150 days for that window.
Yeah, I mean, it's nice to finally be talking about initiatives that will help to bring prices down after always talking about prices are going up. And a lot of people are wondering if, the importation will actually help to bring prices down. And, but one thing first is that our production of maize is not enough for our domestic consumption. And, in recent times, our production is falling. So for now, we have to import. And talking about the import duty, which is basically taxes on imports, you have about tariff of 5%, you have level of about 50%. By the time you take that 20% off the current price of maize, which is around 105,000 naira per 100 kg, it takes you to about 95 kg. So the price comes down. That's a fall in the cost of importing. But ideally, the import duties are not the only factors that affect, the price, the final price that consumer pay for imported commodities. We have the global maize price, which is a key concern. And if you look at within the last year, while domestic price of maize has increased about 100% in Nigeria, globally, global maize price has actually fallen about 26%. So, we're seeing a divergence there, and obviously because of the exchange rate depreciation. So if this initiative is going to work, the forex, the exchange rate has to be stable at the forex market, and luckily we expect that the CBN has been hawkish. That's going to help to promote foreign portfolio investment. So we expect the naira to be stable. That is going to help to ensure that the exchange rate is stable, and that way we should be able to see lesser prices. But a key concern is the long term effect, because if it's just going to be for 150 days, my as an importer, the incentive for me is that I can buy cheap now and then sell at a higher price later. So we have to be sure that to improve long term, to ensure that prices remain low at the long term, to increase domestic production. That is still the number one factor that's going to help to bring prices down.
Yeah, because it'd be quite sad, if we get this duty-free window and we can't get the supply from most of these countries, at this time. But apart from human consumption, which accounts for only about 11% of global maize demand, maize is also used for livestock feed. That's about 60%. Industrial processing. They're also used for production of some cereals. So what will be the impact on the supply and demand of these derivatives?
Yeah, so one key thing about maize is, it's a raw material for the production of many products. And even as you said, rightfully in Nigeria also, human consumption accounts for only 10% of actually the total maize consumption in the country. 20% goes to animal feeds, and the rest goes into, all these food and beverage industry they use as inputs for their production. So when we have the the price of maize coming as a raw material, ideally should lead to a lower price for all these other commodities. And this is key, especially in the poultry industry. Maize accounts for about 60% of poultry feed. So when we have price of maize coming down, that should filter through to lower price for egg, lower price for chicken, and ideally you see this also in the production of snacks like golden meal and cornflakes, which use maize as a raw material. We should begin to see lower prices for there also. So there's a multiplier effect of the lower prices, and for there, obviously with that, food inflation should begin to taper.
All right. So one of the concerns about the import duty waiver is the possibility of hampering the domestic maize market in Nigeria. What can be done to improve, maize yield in the country and, bolster domestic production, even though this window, still is a positive, at this time?
Yeah, so basically, with concerns for the long term and with the real solution being increasing production, what should happen is within this window, there should be key initiatives that address, production. And obviously, if you look at our yield per hectare, it's currently low, about 2.1. This is low compared to South Africa's yield per hectare, which is about 4.9. And one of the reasons is because obviously we do a lot of subsistence farming. If there's mechanized farming, is this commercial farming, the yield per hectare can increase as much as 10 yield per hectare. So with that, we see increased supply, and also there's need for improved agricultural extension services, because one of the factors that affects the yield is pest infestation. So there needs to be more training, there needs to be recruitment of people who actually study agriculture. We see a lot of agri graduates in the banks. They need to be government, they need to be job opportunities for people that study agri to apply what the knowledge they have earned, and obviously there need to be more incentives for people to go into agri. And also we need to decentralize our dependence on the northern region, still cracked by insecurity. But if we can have an improvement in our value chain where we don't depend solely on the northern for our food products, that will also help to bring down logistic costs. So these are some issues that are going to determine a high price that the government within this import window that needs to be addressed, so we can see improved supply.
All right, so you heard it there from Tomiwa. If you're in the bank and you have a background in farming, Tomiwa is saying head back to the farm, at this time. Thank you so much, Tomiwa Jowole, analyst, financial derivatives company. Thank you.
Thank you.
All right, let's get a check on the crypto market. And yes, it is red on the screen. If you can see that right there, Ethereum, Bitcoin, no one's, the only safe one there, not in the red. We see Tron holding on there in the green, but it's majorly red right there. Wow, just Tron, 13 cents at this point in the green. So the sell-off's intensifying, and it seems Ethereum is leading this rush out of the market at this time. Let's get a check on the headlines. Right there we see Coinbase, that's the UK arm of the cryptocurrency exchange, the US-based exchange. They've been fined right there in the UK. The arm's been fined £3.5 million, and that was actually today over breaches of a voluntary agreement designed to stop cryptocurrency exchange onboarding, high-risk customers. So they didn't play, according to the regulator, they didn't play according to the rules, so they've been fined that. Then we see the Ethereum ETF sell-off, and I guess that's why we see Ethereum is down about 8% right there today. So when it was Bitcoin, the Bitcoin ETF, we did see a rally, up to the point where we had the ETF launch, but it's not working the same way apparently for Ethereum's ETF. A total of 73,000 traders were liquidated for the day, resulting in a total liquidation value of about $292 million on Binance. That's the largest liquidation order that's we've ever seen on Binance at this point. So it's not looking too cute there for Ethereum with the ETF. But let's bring in Rumi Ofi to bring us up to speed. Hello, Rumi.
Good afternoon, Larry. Good afternoon.
Yeah, so it's really red right there, and I would expect the king of the altcoins, and getting that spot Ethereum ETF, at this point would be a positive for altcoins, but it's not looking like that.
Yes, it's exactly, because as much as we have some inflows coming up on the Ethereum ETF, outflows are also going out from Grayscale. You know, they already have a trust before now, and the fees are actually high. So now that the Ethereum ETFs are here, so there's going to be more like a competition for lower fees. So if you were paying certain high amount for the trust before now, and the Ethereum ETF is here, you will most likely not want to pay such high fees rather than go to others to use. So a lot of outflows are on the Grayscale Ethereum ETF right now. But again, the current market has actually held. Yesterday, you saw what happened on the U.S. stock, where about $1.1 trillion actually was swept out of the market, and the list we had in the crypto was about 0.5%. You know, today we've had about almost about 2%. So I think the crypto market is still holding really strong, kinda. So let's say this is a safe haven for once.
For once. But, you know, looking at how this market has, you know, developed for the past 10 years at this point, the market is used to always having some kind of alt season. But it seems there might not be an alt season at this point with the way the market is looking. We've had the Bitcoin spot ETF. Now Ethereum is also having its ETF at this point. But it looks like the alts are not moving the way investors would actually expect. What do you think is behind that?
All right, Ladi, we've been saying this for a while now, and thank God we're here again. And a couple of persons usually call me Rome the Beer. Well, I don't think we're going to have an altcoin season this year. This is the reason the rates are still very high, and I don't think the Fed will want to risk cutting rate very soon, although some persons are calling for September. But I don't see it in 2024. I'm looking at 2025 most likely. So might have some downside from now because the elections are all over. And I think a particular candidate is the reason why the market is still holding down. The market has some very good reason to go below. And what I'm seeing, it's downside. And I want everybody to prepare and learn how to breathe underwater.
Right, learn how to breathe. I guess just go learn how to swim at this point. But, you know, looking at the U.S. Politics, you know, in 2023, most of the experts said it, that expect the markets to be rocked by politics, half the world, you know, heading to the polls in 2024. But looking at U.S. politics at this point, we've seen the likes of former President Donald Trump actually, you know, speaking directly to the crypto community, saying, you know, the U.S. is going to support, you know, the crypto industry. You don't have to be afraid of regulation and all of that. But do you think Trump is actually truly pro-crypto?
That is a very fantastic question, Ladi. The truth is that politicians will always be politicians. People are actually rallying around him now. He's speaking to crypto. Once upon a time, he said he didn't believe in crypto. So let's say for now, he's believing in crypto just because he wants to appeal to certain persons in the swing states to be able to win elections. But the truth is, what if, the question I was asking some of my friends in the US, what if he gets into office and he does the very opposite? That becomes a problem. But I have certain reservations. You know, crypto shouldn't be, the Bitcoin community and crypto at large shouldn't be built around just somebody. It is an electronic peer-to-peer cash system, you know. So, but the fact that we are here, where it's being discussed in politics in the US, is going to be more like when someone does the opposite, it's going to greatly affect the market. Well, I think tomorrow he's going to be speaking in the Bitcoin 2024 conference, which is a laudable stripe, if you ask me. And it now behoves, maybe in Nigeria in the future, we'll start seeing political aspirants talk about what they have in store for crypto. But I expect a few very great things from him, even though we're not sure if he's going to win. But like he has always said that he's not going to allow China be dominant in the crypto industry, rather position the US, because in this present administration of Joe Biden, crypto has been hit really hard, so to say, to compare to our climb here and more like the previous administration or thereabout.
Right. So, we've seen the end of the first half of 2024. Bitcoin did start at about 40,000 range and did get to about $70,000. But what are you seeing in the second half now, this second half for Bitcoin? Do you think a correction is on the horizon?
Yes, currently, I don't know if you listen to JP Morgan's trade, Jamie Dimon actually said it. I have actually said it before now that we need a correction. The market is overpriced at this current price now. It needs a correction so that everyone comes down to re-strategize or fresh money comes in. For those that are over leveraging, they are going to lick their wounds most likely. But let's take it seriously that protecting of capital is very important, not just going all in without having it in mind that you can as well lose your life savings, lose all your money, and be found wanting at the end of the day.
All right, definitely. We heard it from Rume, the bear. Some people will call Rume at this time, but yeah, definitely the truth has been said. Thank you so much, Rume, financial market analyst, always giving us those updates right there in the crypto market. Thank you so much.
Thank you, Ladi. Always a pleasure.
And that's the show today. Remember, you can visit channelcv.com for more updates. You can also get on our YouTube. We're going to upload this and you can watch it again. And all our other productions. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.